Yes.
So we have Sandeep.
Yes.
Pardon, sir?
So we have Sandeep also, Sandeep Shah, who
Yes.
is,
So we shall be. I had a word with. I had a word with Rima that Sandeep Bhai will speak first, and he'll give some brief about the Gift City, and then will be your turn, I guess. So is that okay, sir?
that's no problem.
Yes, sir. Yes. Okay, Chavda sir. So shall we start, Chavda ji, or we shall?
Yes,
Like,
yes.
people
Yes,
will people keeps on joining. Like once we start, so we text in the group. So generally people start joining it.
Yeah. The numbers will go increasing, sir.
Yes. Okay. Good evening, everyone. This side Chintan Thakkar here. Chintan Thakkar here. I am here as a deputy convener for Gandhinagar CP Study Circle, and with me B K Chavda ji is here. He is the convener for the Gandhinagar CP Study Circle, and we have today faculties for two faculties for today's session. The session is on the opportunities at the Gift City, and Mr. Sandeep Bhai Shah, who is working as who is a developer at a Gift City, and Mr. Suresh Swami will give us the opportunities at the Gift City and the opportunities for being a chartered accountant over there in various compliances and all that are there when in terms of the Gift City. So with this brief about the subject, I request Chavda ji to give the brief for the today's session.
Welcome, sir. And as we have very beginning, I have said, sir, Gift City is basically the very important and well-known place in all over India, even after being the capital city of Gujarat. Gandhinagar is very well known by more as the place of Gift City, the first financial tech city in India. And definitely we, the people of Gujarat, are going to be benefited like anything from this. But hardly any of us know the in detail that what is there going to be happen, how the Gift City is working, how our fraternity is going to get the benefit of it. So this seminar is arranged, and Swami sir rightly given us the time. So thank you very much, Suresh Swami sir and Umesh ji. And just all the members are here eager to listen you, sir. So without wasting much of time, sir, just I coming back to Chintan Bhai for this furtherance of the seminar. Thank you, sir.
Thank you, Chavda ji, for your welcome note. Now I would request Umesh to introduce today's first faculty for today, Sandeep Bhai Shah.
Thank you, sir. Mr. Sandeep Shah, head of IFSC department at Gift City. Gift City is developing an international financial service in Gandhinagar, Gujarat. Am I audible?
Yes.
Okay. Mr. Sandeep Shah, over 11 years of professional experience in project development, policy matters, international financial services, regulations, and security markets. Mr. Sandeep Shah is become an MBA with specialization in international finance. He has also done diploma in foreign exchange and risk management and company secretary, intermediate from Institute of Company Secretary of India. He has been involved from beginning of IFSC at Gift City. He has been leading various initiatives with IFSC Authority, Ministry of Finance, RBI, CB, IRDAI to develop and promote IFSC globally. He is also instrumental in preparing key regulatory proposal for IFSC institutions. He works closely with IFSC Authority for developing new lines of business such as aircraft leasing, international bullion exchange, offshore fund management, etc. Currently, he is head of IFSC department at Gift City and has been instrumental in bringing domestic and international financial institutions in Gift City. He has played key role for signing cooperation for Gift City with Bloomberg, Refinitiv and Educational Institute like GNLU, Gujarat National Law University, Nirma University, ICFAI Business School, and National Institute of Financial Management. He has worked extensively in various committee formed by Ministry of Finance, Ministry of Commerce, Ministry of Civil Aviation, in the areas of international financial services. Currently, he is a member of steering committee set up by Ministry of Finance for promoting export of financial service in India. He is also a visiting faculty in Institute of Commerce, Nirma University. He has previously worked with HSBC in securities market vertical and National Security Depository NSDL at Mumbai between 2010 and to 2015. He has in his earlier assignment worked for operationalization India's first insurance repository. Thank you, sir. Thanks. Welcome, sir.
Thank you very much. Yeah.
Yes, thank you, Umesh bhai, for introducing today's faculty, Sandeep bhai. With this brief introduction, I would now request Sandeep bhai to take charge of the session.
Thank you very much, and it's my pleasure to be part of this event today. I'll request Rima to share the presentation on the screen. But while we will start the presentation and discussion, I'll like to kind of reiterate here today that it's a great opportunity for the chartered accountants based in Gandhinagar, because while the center is going to help Gujarat and as a country as a whole, but Gandhinagar much closer to this financial center. The CS in Gandhinagar should be the first one to take the advantage of all the overall opportunities which are coming up here. I think this should not be the kind of a first and the last session. It should continue from here, because there are various opportunities coming up on daily basis, regular basis. So as a CA, whether you are into a profession or whether you are part of any organization, GIFT City offers some or other opportunities where you can actually look at. What we will do today in this presentation, we'll try to give you the overview and overall opportunities, not only as a chartered accountant as a profession, but also from the various other business activities. And this will also cover, the employees working as in some of the organization and looking for some opportunities. And second, some of the practitioners who can now, traditionally we have seen CS working for the auditing practices or the consultancy practices. But I think this is a new domain where, you can expand your business vertical into the international financial services. And there are already multiple activities happening. And as Suresh rightly mentioned, they have set up as a PwC has set up a huge office space in GIFT City, and they have hired 30 chartered accountants, while the capacity of the office is 170. So there is a within one office there are already opportunities for the CS to be a part of this ecosystem. I think with this background, let me give you, I'm sure many of you would have visited, being closer to this center, the GIFT City, but I'll share some of the uniqueness of the city in terms of the infrastructure facilities that we have created. And then subsequently we'll discuss specific opportunities in the international financial services center. Yeah. So as you all know, the Gujarat, we are very much ahead in manufacturing activities, whether it is automobiles or the pharma or chemicals. While this is an attempt to create the global financial and IT services hub. Many of the localates from the Gandhinagar know that the project has been in discussion for last more than 10 years, where in 2007 it was conceptualized, and on ground 2012 was the year when the physical infrastructure work started happening. The land was a barren land, when it started in 2012. So whatever progress that you see today is the journey of last 10 years, where it was a complete barren land, and from that scale, it has, state-of-the-art infrastructure has been created. Because it's a greenfield smart city project, the city has created very unique infrastructure facilities, and I think we would also invite all of you to come and have a look at some of these facilities. And these include, the entire city is under the underground utility tunnel, which means that all the pipelines and cable connections are laid down under the tunnel, and there will not be any land digging for maintenance activity. Even a vehicle can go inside and do the maintenance activity. Similarly, there is a water treatment plant at the city level. There is a centralized plant, which means you don't need ducts outside the building. The cooling is provided through a chilled water and it is converted into the air. The idea to showcase some of this feature is to give you a perspective that the center, while the regulation and tax, are at par with the other leading centers, the infrastructure facilities are also created on the lines of the other leading financial centers. And that's how some of the international institutions are already enjoying the facilities created within GIFT City. While GIFT City is known for the International Financial Services Center, IFSC, it is divided into two parts mainly. One is domestic zone and another is the special economic zone. The domestic zone is as good as any other location in the country having office in Gandhinagar or any other city. It does not have any special regulation in the domestic zone. However, Government of Gujarat provides various incentives even in the domestic zone for various IT companies or back office financial services companies to operate from the domestic side of the city. The international zone is a unique where this is the only location today in the country which is notified as International Financial Services Center. Means any financial institution planning to provide services in the international financial services domain, the location from where they can provide it. And 2015 was the year when Government of India notified the zone as the International Financial Services Center. And subsequently, the tax incentives were also to ensure that the entities have the similar ecosystem which generally they enjoy from the location like Singapore, Dubai, or Hong Kong. And as you all may be aware, initially between 2015 to 19, India were regulating the zone such as RBI and IRDA for the banking, insurance, and the capital market activities. Now, GIFT City has a unified regulatory authority, which is basically a single authority for all the financial services business. We can go to the next slide. So the IFSC authority, as I was mentioning, IFSC authority basically has a kind of power of the regulators like RBI, SEBI, and IRDA for the banking, insurance, and capital market activities within this zone, which means if you want to set up a bank or if you want to set up any capital market entities, you don't need to go to the multiple regulatory body. Now, under the Ministry of Finance, it's a single regulatory authority in GIFT City, which provides license and regulates all the financial services business within this zone. It provides ease of operation or ease of doing business basically to the financial institutions. And as a Gujarat, it is also a proud moment for us because the first central regulatory authority has been established today in Gujarat and at GIFT City. Otherwise, you've seen the RBI, SEBI generally, they are located in either Mumbai or, Hyderabad kind of location. So as a state, GIFT City, is the first to host the central regulatory body for the financial services business. Yeah, next. As we speak today, the ecosystem has already been established from the financial services business perspective. I'm not sure if you are aware, but there are already 2 international exchanges operating today in the GIFT City. And these international exchanges operate 22 hours a day, which means they cater from Japan to the US market. The difference between, the exchanges in Mumbai, which are BSE, NSE, and the exchanges in GIFT is, these exchanges in GIFT provide all dollar-denominated products. They don't deal in rupee-denominated products. Second, they can serve to any foreign clients. Basically, it can be NRI, it can be institutions, it can be foreign individual clients. And these exchanges have been, clocking more than $15 billion volume on daily basis as we speak. Similarly, there are banking units. Now the number is more than 19 banks are present. And the business they've done is more than $50 billion of transactions these banks have already done. The asset size of the banks has crossed $22 billion. So this banking business is something very interesting, where if you are also, if you are advising to any Indian corporates, or Ahmedabad or Gandhinagar based corporates, their foreign currency requirement in terms of the loan or in terms of the other debt instrument, it can be solved by these banking units established in GIFT. So as you all know, many of the Indian corporates avail ECB, which is external commercial borrowing, a foreign currency loan from the overseas banks. Now, instead of going through the overseas bank branches of the Indian banks or foreign banks, you can now approach the banks in GIFT City and they will be able to provide a foreign currency loan under the ECB norms. And similarly, many other transactions like trade finance, buyer's credit, can be provided by the banks present in GIFT City. So this can be an opportunity for you to approach some of the Indian corporates based in Ahmedabad or any other location to give them the perspective about availability of low cost financing through these banking units. There are insurance players, more than 19 insurance players. They are mainly into the reinsurance business. Players like ICICI Lombard, New India, GIC, they have set up their insurance unit here. And from the capital market perspective, there are alternative invest funds already established. So we have seen that mostly the FPIs generally come through locations like Singapore and Mauritius. Now the FPIs have also registered through GIFT basically as an AIF, and they are investing in India under the FPI route. Already, now 7 have already obtained approval, but more than 22 applications have been received, where such AIFs will set up here, will raise money from the foreign investors, and they can invest in the Indian domestic market. Similarly, there is ancillary services framework as well, where Suresh will discuss more in detail, where as a chartered accountant, you have an opportunity to actually come and set up your office here and serve to the clients within GIFT City and any other offshore clients. Apart from the banking, insurance and capital market activities, as a GIFT City, we are also trying to develop new lines of businesses, which generally have been carried out from the other financial centers, but with the enabling regulations and the tax framework, these businesses can be provided from GIFT City as well. And it includes, businesses like aircraft leasing and financing, ship leasing business, bullion exchange is coming up, which is going to be India's first spot bullion exchange. So all of these new business activities are also under, it's already happening from the zone today, where as a CA, you can play a role of, of serving to some of these institutions. Next, please. The IFSC, this is something very important for as a chartered accountant, as a profession, that the regulation that you need to look at while considering IFSC as one of the business opportunity. So the IFSC has been established under the SEZ Act, where Section 18 permitted, and provided the license as IFSC to the GIFT SEZ, which means any IFSC unit also recognized as a SEZ unit. So all the compliances related to SEZ would also be required to be followed. Similarly, the IFSC authority is the now, as I mentioned, unified regulatory body. And this authority has been coming out with various new regulations, which means when you set up a bank here, you need to follow only the IFSC Banking Regulation 2020. Or when you set up a finance company, this is the regulation which has been issued by a regulator. You don't need to look at the regulations of the domestic regulator in India. So that's how the center is coming, the regulator in GIFT City is coming out with its own regulations, which is helping companies to operate from the zone on the lines of other leading centers. And the important point to look at here is when you set up an entity in IFSC GIFT City, you are recognized as non-resident entity, which means the FEMA restrictions would not apply to you. You can have any kind of foreign currency transactions without any restriction with the overseas entity. So that is something very important. And income tax, while under the income tax, you will still remain domestic entity. However, certain income tax incentives have been provided to make it at par with the global financial centers. The tax regime is also very attractive, and I'll not speak more on the taxation side in front of the chartered accountants, but just to give you a perspective, the income tax holiday is 10 years out of 15 years, which means you can select any 10 consecutive years out of 15 years when you set up your business in GIFT. And there are other certain tax incentives like, exemption under capital gain tax, exemption from withholding tax, and so and so. The other aspect is about the state government subsidies. So when financial companies, when they plan to set up a back office operation here, they can also avail the state government subsidies under the IT/ITES policy, which has recently been announced. And those subsidies are also quite significant, where the capital expenditure is reimbursed up to 50 crore, and the provident fund reimbursement is provided for the for the 100% female employees and 75% for the female male employees, basically. That is reimbursed by government of Gujarat. So these are very significant incentives provided by state government, which helps to reduce your operating cost when a back office, when an IT company or ITS company set up their operations in the GIFT City. Next. In terms of the process, it's quite straightforward, where you need to identify a space. Based on the address proof, you will be able to apply to the SEZ authority and the IFSC authorities parallelly. Our experience says that within 45 days of time, one would be able to obtain these approvals. The requirements of documents for both the applications have clearly been defined. So, and that is available on our website as well. So typically an entity requires to go through this process. Certain activities have also been permitted under the branch structure. And in that case, you don't need to set up any entity under the register of companies. Even a branch can be set up to carry out certain activities permitted under the regulations. So like banks are operating under the branch structure today. Even the insurance companies are operating under branch structure today in GIFT City. While the capital market intermediaries, they operate under a separate company structure. So they've created a separate subsidiary company to operate in IFSC. Yeah, next. So I'll cover the now specific opportunities mainly from the trading perspective, capital market perspective, which is something very important and relevant more, because recently the National Stock Exchange, as you would have read about the new product where the unsponsored depository receipts have been launched on the NSE IFSC exchange platform, where as an individual, you and me would be able to buy the US stocks in fraction of units, basically. This product is now available on the platform, and using the LRS, which is liberalized remittance scheme of RBI, all of us would be able to now buy the US stocks. As I was mentioning, there are two international exchanges, one set up by BSE and another by National Stock Exchange. They provide products like, the index futures, index derivatives, basically, which includes the Nifty 50, which is a popular product of NSE, and the India 50, which is the product of India International Exchange. These indices are traded on the both the exchanges. The Singapore exchange, where the Nifty is traded, basically, the SGX Nifty, as you all know, would now be shifting to the NSE IFSC exchange, which means the entire volume of a Nifty from Singapore exchange would shift to the exchange in GIFT City at NSE, which generally generates $5 billion kind of open position on daily basis. So this can be one of the attraction point for some of the traders and the capital market players. Apart from indices, there are other instruments like single stock futures. There are commodity derivatives, currency futures, like you can even trade on rupee dollar contracts on the IFSC exchange platform. And the investors can be non-resident investors, including the NRIs. It can be any institutional investors. It can be FPIs. Additionally, you can now have the resident investors as well. Under LRS, you can invite them, basically. You can have them as a client for trading on the exchange platform. Yeah. The advantage when you set up a broking entity here is, as I mentioned, the 100% income tax holiday for 10 years. And the security transaction tax and the commodity transaction tax have also been exempted on the IFSC exchange platform. So there is no STT, no CTT, there is no stamp duty, there is no GST. So basically it reduces your transaction cost when you trade on the IFSC exchange platform. And the products are on, so there is a single exchange for all the products. You don't have a separate commodity exchange or a separate currency exchange. Single exchange in GIFT City would be able to offer all the products covering from equity to commodity to currencies to, the other debt securities as well. And which makes it attractive. One of the exchange in GIFT City, which is India Annex, they also created a India Annex Global Access kind of a platform under which the capital market intermediaries and the investors be able to access to the any other global markets. So that is also something very interesting where you can trade in any other market. And there is a framework by the IFSC which also allows you to become a member of an overseas exchange to trade in any other overseas securities. So I think this provides a great platform for the capital market players where you can actually access any market in the world sitting at one place. Yeah, next. Tax framework for various capital market instruments, so the important part is the capital gain tax has been exempted in both short-term and long-term capital gain exemption, which means when you trade on even derivative products on IFSC exchange platform, there is no short-term capital gain tax, which is generally 30%, when you trade on the Indian market on derivatives product. And similarly, there is no short-term or a long-term capital gain tax for some of the instruments securities defined here. And there is no GST as well. So I think this makes it more platform at par with any other leading overseas exchange. And as a chartered accountant, you can create a product or, you can create a kind of a portfolio for your investors where they can access to some of these instruments available on the IFSC platform. Yeah. We can go to the next. This we have covered. STT, CTT has also been exempted. The last point is very important where for the investors in the alternative investment fund in IFSC, the requirement of obtaining PAN number, which is the income tax ID, has been exempted. That is something very big where the foreign investors don't need to register with the income tax authority and they don't need to file income tax return in India. Which this provides ease of doing business kind of a environment to the foreign investors, where the investors like they trade in any other international market, they don't need to register with the income tax authority. Yeah. So I think with this, I'll end my presentation and I'll hand it over to Suresh to take you to some of the other opportunities in other segments of the IFSC, and we'll be happy to have, answer your questions post this presentation. Thank you.
Okay. Thank you, Sandeep sir. Thank you, Sandeep bhai, for giving us this wonderful presentation and sharing with us the opportunities at GIFT City. Now, without taking much of the time, I would now request Romil Shah to introduce the another faculty for today, Mr. Dr. and CA Suresh Swamiji. I now request Romil to introduce the Suresh Swami.
Thank you, Chintan bhai. Suresh Swami sir is basically member of Chartered Accountant and Cost Accountant of India. He is a partner of at PwC and based at GIFT City. He has over 22 years experience in the direct taxation, and he has handled very large number of clients in the financial service space. Now, taking not much of time, I hand over online platform to Suresh Swami sir.
Suresh sir, please take the charge of the session. Thank you.
Thank you so much, everyone, for firstly having me here. And it is really indeed a great pleasure to be here and speaking to fellow chartered accountants. Just as an introduction, yeah, while Romil did talk about my professional qualifications, I must say that I have lived in Bombay or Mumbai for most of my life, right? About 49 years now. Very recently, I have moved to Ahmedabad and I've been operating from Gandhinagar office. It's just been a month since I have moved. So, but I must tell you that the city has received me well, and I find the people here to be warm and accepting. Uh, people who migrate from other cities. So, thank you so much for all of that. It's really now has started feeling that I'm in my hometown, right? So, thank you for all of that. Uh, uh, what I will do in the next few minutes is to take you through two parts. One is what is there for us as chartered accountants, and you can feel free to ask me any questions. Maybe at the end of the session, just to make it manageable. You can ask me all any questions at the end of the session. I'll take you through all of this. And if it's really a burning question and if you have to really raise it then and there, please feel free to raise then and there, no problem. I have bifurcated the session into two parts. One is what is in it for us, and two is what is it for our clients, which who can actually set up something in IFSC. I'm sure you will be interested in both, because if clients have an opportunity, then you have an opportunity to take it to the clients, right, and tell them that this is something which can be done. Right? So that's how I structured the presentation. So maybe firstly, I'll talk about what is in it for us, right, as professionals. And next slide, right? Yeah. So here, as Sandeep mentioned, and we have a IFSC authority. IFSC authority has issued various guidelines, various regulations, various framework, and one of this is the ancillary service framework. What does this ancillary service framework do? It recognizes that any entities which are set up here in IFSC, right, they are also treated as financial service entity if they obtain this registration. The framework talks about various services, and I will talk about what are the services which are covered in this slide. So it talks about various services which can be provided by entities here, right? So if you are a chartered accountant and if you are doing accounting services or taxation services, you can certainly consider setting up a presence in IFSC. It can be by way of a branch office also, right? You can have your branch in the domestic zone, and then you can also have an extension of that branch at that office in IFSC. What can you do from here? You can actually serve entities which are set up in IFSC. So IFSC, we are seeing a number of entities which are being set up in IFSC, which are setting up a presence. So you can provide all the services which you provide on the domestic side. You can provide all of that to these entities as well. You can also provide services to foreign jurisdiction, right? Entities from foreign jurisdiction. So if you have clients in overseas, right, and you have to provide them services, that is also covered here, right? So many of our clients are overseas, right, and we do work from India. So all of that work actually can be done from IFSC. And the last piece is entities which are in India, so Indian companies which are wanting to open or set up operations in IFSC. They also can you can also provide service to them. Right? Now, what is the kind of presence you can set up? As I mentioned, from fellow chartered accountant standpoint, you can set it up as a branch. But the regulation also provides you to set up a newly incorporated entity. Any Indian or foreign corporate entity can also set up a subsidiary, right, in addition to a branch. So all of that is permitted. In terms of currency of operation, currency of right? You have to necessarily transact in freely
मैं तो कह रहा हूँ
convertible
एचपी वाला ले ले 56 वाला अपना 50 का एस्टीमेट था हाँ तो 10,000 क्रेडिट मिलेगी ना तेरे को यार क्रेडिट नहीं मिलेगी 10,000
So, sorry,
45
there is
वाला
some background noise.
ज्वाइन तो कर ले ये
Yeah. So, what is the currency for conduct of business? You have to necessarily conduct these operations in convertible foreign currency. So, what does it mean? That means when you are billing your clients, you need to raise your invoices in convertible foreign currency only. But that doesn't mean that as far as administrative expenses are concerned, you cannot say local expenses are concerned, you need to incur only in dollars. There is a provision that for local expenses, like for salary to staff, right, for stationery, travel tickets, all of that, you can actually use your INR account and you can actually make the payment. So there is a separate provision which is there for you to open a SNRR account, and out of the SNRR account, you can actually make the payment. So it's a well thought through how you can actually carry out the operation. Now coming to the next slide, what are the operations you can carry out? So as far as the framework is concerned, the ancillary service framework is concerned, it talks about accounting, auditing, bookkeeping, taxation services. So from chartered accountant services standpoint, this is probably what we do day in, day out, right? And for your foreign clients, for your overseas clients, you can actually set up the office here and you can do all of this from here. And I'll talk about what is the benefit, right, in a minute. Apart from accounting, auditing, law firms, they can actually set up legal services. They can do legal services. You can do company secretary services here. You can do professional and management consulting from here. And the framework also provides about administration, say asset management, trusteeship, all of that can actually be done out of IFSC. What is the biggest advantage, right? Why would you want to consider that to be done? You are all based in Gandhinagar, right? It's maybe just 5 kilometers away from this. Why should you even think about setting up something here? Biggest advantage, I would say, from professional standpoint, from your personal standpoint, is that the entity is entitled to a 10-year tax holiday, right? So you can choose 10 years out of the first 15 years, and for 10 consecutive years, you get 100% exemption on your profits. Mind you that the profits exemption only in respect of services or income from non-resident or the ones which I specified, right, in the previous slide. These are the 3 set of entities or clients whom you can serve. So long as you are serving those entities from here, you will be entitled to 100% tax holiday. So that's a big one, right? And today nowhere or in India you get this holiday, income tax holiday. In fact, chartered accountants are never entitled to any holiday. This is the first time you probably at least in my professional career, I am seeing chartered accountants or accounting firms getting some kind of tax holiday, right? So that's a big advantage which one can actually avail of. Going to the other slides in terms of so when you set up your office here, what will you do, right? What will you do and what is that you can actually provide? And I will get into more specifics here in the subsequent slides about what are the opportunities which other clients are looking at, right? Why are they setting up some kind of presence here? And that will obviously trigger thought in your mind that, okay, these are the companies which are coming in, and you as chartered accountants can start providing services to these companies. And let me talk about firstly about banking units, IFSC banking units. Similar to the SEZ concept, you will remember that is offshore banking units was there. Here in IFSC, it is IBUs, right? But in the next slide, what we have put here is that what is the banking regulation? Who can set up Indian IBU? So Indian banks can set up. So you have, and you probably, as Sandeep covered in his initial introductory, there are a number of already Indian banks, say Bank of Baroda, say State Bank of India, right? All of them have already set up their IBUs here in IFSC. There are foreign banks also who are in the process of setting up. So in the public domain, what is available already is that, so for example, Citibank, Deutsche Bank, right, Barclays, right, all of them have kind of set up presence in IFSC, and they are opened a foreign branch here, right? And as Sandeep mentioned, what is the difference between a branch in India versus a branch in GIFT City? As far as the branch in GIFT City is concerned, it is considered to be a foreign branch, right? Like many of the Indian banks were having foreign branches, right? So SBI had global branches. So what IFSC offers them as an opportunity is they can actually have one branch in IFSC, and they can actually do global operations from this branch. So they don't need to any longer have multiple branches in multiple countries, right? They can just do all that operations from here in IFSC, because that, and many of the banks are actually considering that, because that actually reduces the overall cost. Instead of having a full-fledged branch in, say, New York or in London, they can actually have the full-fledged branch here in IFSC. They can probably just have a rep office there in those jurisdictions just for client contact. But for the transaction and all of that, that can actually happen from IFSC. Right. So overall, from a costing standpoint, it reduces the cost of operation significantly. Right. Cost of operation in New York or London will be maybe 10 times of what you probably have in Gandhinagar, right? So that's a big advantage which these banks are looking at. As a bank, they will of course need a license from IFSC authority. So that's one aspect which needs to be considered. From a regulation standpoint, the parent bank has to provide a minimum capital of 20 million, or as may be specified by the IFSC authority. But today it's 20 million. What IFSC authority also has said that it can be maintained at the parent level, right, in the manner specified. So you don't need to actually bring that money into India. You can actually retain that money, earmark it in your home country. Suppose it's a foreign bank, right? Let's assume it's a XYZ bank from US. That bank can actually retain the 20 million in US. It can just earmark that at the parent level, right? So therefore, from an overall costing standpoint, also for the foreign banks, they are able to retain that money in their home country and deploy it for necessary purpose, right? From a, again, regulation standpoint, if you have to open a bank IBU, you also need to get a home country regulator. So if it's a US bank, it needs to go to the US Fed and get a NOC, and then the bank also needs to give an undertaking to the authority that they will provide liquidity support to the IBU. Because RBI, remember that this is a branch outside India. RBI does not is not the lender of last resort. So therefore, the comfort which IFSC gets is that it takes a letter from the parent saying that it provide liquidity support. Right? Now, as far as the IBU is concerned, what are the activities it can perform? It can actually perform everything which is mentioned in the in section 6 of the banking regulation, plus whatever is mentioned in the IFSC authority section 3.1, right? If essentially it is a very comprehensive scope which they have given. Almost everything which Indian bank can do, all of that can be done out of IFSC. There are also certain prudential requirements. There are certain maintenance of ratios which are required. SLR and CRR are exempted as far as these banks are concerned. These IBUs. IBUs, however, need to maintain a retail deposit reserve ratio on a daily basis at 3% of the deposits if they are raising it. That's more from a liquidity standpoint, right? So that's what the regulation provides. Next slide we have kind of captured what are these banks really doing here, right? What we notice is that the one activity is ECB and trade finance. Now, if you look at your clients, right? Many of the clients may actually take a ECB from a foreign bank. Usually what you see is that the foreign bank will not want to bear the Indian tax liability, right? There is a, when the interest is being paid to a foreign bank, there is usually a 5% withholding, right? Which happens. Now, what can actually happen if, as far as IFSC is concerned, is that if these banks are not going to be subject to tax in IFSC, right? There, because their income is going to be exempt, right? Now, from a pricing standpoint, what therefore happens is that a pricing of the loans which are done from a IBU, they are much better than what the same bank offers from their overseas head office, right? Or overseas branches. So Singapore branch versus IBU in IFSC, the pricing can be much better, right? Because as far as Singapore branch is concerned, it will not want to bear any taxes, and therefore it will always want to gross up. It will ask the Indian party, when it's paying the interest to the Singapore branch, for example, it will say that Indian party has to gross up, bear the taxes, and then only make the payment, right? But that need not necessarily happen as far as IFSC is concerned, because IFSC branch is exempt from tax altogether, right? And then it's borrowing, as far as its borrowing is concerned, when it's borrowing from its head office, there is no requirement to pay any tax. The non-resident entity is also not subject to any tax as far as the borrowing is concerned. So therefore, the pricing which IBU is able to offer is better than what the Indian companies can actually get from say other foreign banks, right? So one key takeaway for you here is that if you have clients, right, who are, for example, taking ECBs from foreign banks, you can actually, as a value add, you can go to the client and tell them that they should initiate conversation with their bankers that they want this whole loan to be refinanced through the IBU, right? Because that will immediately reduce their overall cost of borrowing. So that's one thing which one can look at. Second is, these banks are also doing NDF tradings. NDF tradings, non-deliverable forwards. Now, if a client were to do a NDF with an Indian bank, right, Indian branch of or Indian branch or the DTA zone, there is a there and if they earn any income out of those trades, that could be subject to tax. Now, if they are actually doing the trade with the IBU, then they are not subject to tax on the gains. So that again is a distinct advantage. If any of the clients are actually doing that NDF, non-deliverable forward, with the Indian branch, they can actually move that business to IBU, and their overall tax liability in India can come down. As far as IBU is concerned, you can also invest in Indian securities through the FPI route. So instead of investing from Singapore, you can probably use the IBU to invest into India as a FPI. You can invest in global exchanges, right? Investments can be made in global exchanges. You can also act as trading members for EPC derivatives, interest rate futures, commodity derivatives. All of that can actually happen from IBU. Next slide. So as I mentioned, income of non-resident from transfer of NDF is exempt, which are entered into with the IBU is exempt. Only condition being that the IBU should commence its operation before 31st March 2024. And that's why you will probably see a number of banks already wanting to do that. If there are any borrowings, right, from if a IFSC unit, including a IBU, if it's borrowing from a non-resident, when it's making a payment of that interest to the non-resident, it is completely tax-free in the hands of the non-resident. There is no withholding as well. That's a big advantage. Even the deposits which non-residents actually place with the IBU, interest on those deposits are exempt from tax. in this budget, they have kind of also made a little bit more. They have brought in some more changes with respect to IBUs. So if a non-resident client is undertaking offshore derivative or OTC derivative. So earlier law provided only for NDF, non-deliverable forwards. Now, if a client is also doing P notes, ODI is nothing but P notes, or over-the-counter OTC derivatives with the IBU, their income will also be, that income will also be subject to, will not subject to any tax, right? Similar to NDF. So that's a big one which has done. So what banks can do is actually shift their ODI book into IFSC, and overall the risk which they have from treaty standpoint, that can actually come down if they put that business in IFSC. Go to the next slide. Yeah. Now there is also, this is an interesting capsule which you will want to pay attention to, and this is with respect to fund management. Right? Here in IFSC, foreign entities can so you can also have fund management happening from IFSC. So you can have a AIF which can be set up here, and you can have the fund manager who can be set up here, and this AIF can invest into India as a FPI, and there is a special tax regime which is there as far as Cat 3 AIFs are concerned. Right? Now, what it does is that from the fund manager standpoint, the fund manager which is set up here in IFSC, he is entitled to the 10-year tax holiday, versus the fund gets the preferential regime which has been prescribed under domestic law with respect to Cat 3 investors. Right? If you are a Cat 3 fund, and you get essentially the same treatment as you are probably if you are a fund investing from Singapore or say Dubai or Mauritius, right? So what does which a fund which is investing from Singapore into India is concerned? What does it get? Its equity is subject to tax at 10%, but as far as debt derivative is concerned, it is not subject to tax. Right? Similarly, for a fund which is set up in IFSC, investing into India as a Cat 3 fund, the equity is subject to tax at 10%, capital gain on that. As far as other assets are concerned, other than equity is concerned, it is completely tax-free. So be it debt, be it derivative, or be it income on security receipt, it is completely tax-free for the IFSC fund. Right? And therefore, we have seen the last couple of years, we have seen a number of funds wanting to have shown interest to set up this particular fund. Now, till date, there was no specific regulation as far as IFSC funds are concerned, and all of this, the setup of the fund, all of that were primarily driven by what was there in the SEBI regulation. Right? So SEBI, SEBI AIF regulations is there, and whatever is prescribed was more or less applicable to the fund which is set up here. Now, what the IFSC authority has done is they had set up an expert committee with an objective to develop and enhance this framework of investment fund in IFSC. So this expert committee looked at various fund jurisdictions. They looked at Luxembourg, Singapore, Mauritius, and many others. And based on what they observed there, they have made a recommendation of what should be the ideal fund regime as far as IFSC is concerned. Right? And based on those recommendations, the IFSC authority has come out with draft regulations. These draft regulations is there in the public domain. Comments were supposed to be invited and were invited, and I think the last date for comments has already passed, but that's available in the public domain. What does this new framework or new regulation really talk about? One, I think key difference is that as far as SEBI is concerned, you regulate the fund. Here, now the new concept or new approach will be that fund, instead of regulating the fund, we will regulate the fund manager. Right? The fund manager has to obtain registration from IFSC, and the requirement for launching of say funds or schemes, that has to be fine-tuned based on who the investors are, right? So the authority is following a risk-based approach. What does it really mean? That if they are registering the fund, they will register the fund, and depending upon whether the investor in the fund is a high net worth individual or a accredited investor, right? Uh, there, in those cases, the oversight will be very less. The requirement for approvals will be very, very limited. Versus on the other extreme, the retail fund, there will be a high regulatory oversight. So that's how they have kind of bifurcated the overall fund regime. And the reason being that earlier, if you see any fund which you set up, any fund which you want to launch, there is usually a time lag, right, between whenever you want to launch a fund. But now your clients will be able to actually launch funds much faster because they already have a fund manager license, and the approval of these funds will be based on their risk category, right? If it's already an informed investor which is investing in it, but as an authority, it doesn't really need to really have a large oversight because those investors themselves will take care of themselves, right? It doesn't need the so much help from the IFSC authority as a retail authority, a retail investor will need. So that's the broad concept. Going to the next slide, in terms of what does the fund regime contain? It contains of, so as far as the fund manager is concerned, FME is nothing but the fund management entity. So we talk about the fund manager. So you have an authorized fund manager, which is like that. If you have a very high, if you have accredited investors, or if you're going to serve a certain set of investors, then you have an authorized fund manager. A registered fund manager is mainly for non-retail. You have a accredited investor, or if you have investors above a particular threshold, $1,50,000 if you have, and you fall under FME. And for retail investors, which are like very even $10, right, for that matter, can be part of that. If you want to serve that segment, you have to get a FME retail, right? So as far as the regime is concerned, you have the authorized registered fund manager, authorized fund manager. You have registered fund manager non-retail and registered fund manager retail. As far as the schemes are concerned, again, venture capital scheme is light touch, right, and it matches to Cat 1 and AIFs. Restricted schemes will be like Cat 2, Cat 3 schemes, and the retail schemes will be more like a mutual fund schemes. Interestingly, you can also, in the same license, when you obtain a fund management license, you can also do other activities. So it's like a kind of a comprehensive license. You can carry out various activities based on that license itself, right? You don't need to have separate licenses or separate activities. So PMS, investment trust, family investment funds can also actually happen under the same license. And on as far as this regulations are concerned, it also brings in special focus or for certain focus areas. So if you have a special situation fund, right, for the special situation, mainly distressed funds, you can put it there. ETFs can be managed out of here. ESG funds can also be a part of this particular regime. Go to the next slide. Yeah, so without spending too much of time on this, again, conceptually, authorized fund manager, or as I mentioned, if you can pool money from accredited investors, and if you have investors who are given a capital commitment of more than 2,50,000, so that can get covered here. A registered fund manager, if you have accredited investor or investors making capital commitment of USD 1,50,000, then that can be as a registered fund manager, and which is non-retail, and the others will all fall under the retail category. Moving on to so So as far as the categories of schemes are concerned, again, the schemes are broken down into venture capital scheme, restricted scheme, and retail scheme. Same concept. And if you are a venture capital scheme, right, you are green channeled, which means because you have investors, the moment you file, you can actually start the fund. Versus in case of retail schemes, you'll have to wait for the approval from the authority because retail money is important, right? So that's the kind of concept which they have brought in. Go to next slide. Portfolio managers and investment advisors can also actually operate from IFSC. So, for example, if any of your clients is a portfolio manager, and if their clients are foreign clients, right, or non-resident entity, person of resident outside India or non-resident, they can actually serve that segment of the population or of the client from IFSC. What does it mean? That if they are doing that activity from India, the fees which they earn from those foreign clients is subject to tax, right? It's subject to 100% tax, so 30% tax is what they end up paying. But as if they actually carry out that portfolio management from IFSC for foreign clients, then the fee which they earn is exempt from tax, right? So you as a portfolio manager, what can you what are the permissible investments? So you can actually advise on just securities which are listed in IFSC, securities issued or by company incorporated in IFSC. You can also manage securities issued by companies incorporated in India. So even, for example, if a non-resident client wants to invest in, say, Infosys or Indian stock market, as a portfolio manager, you can manage that money. You can take the money from the non-resident and you can manage that, and you can invest in Indian portfolio companies or Indian companies. So you can do pretty much what you are doing currently in India, but by just moving that activity to IFSC, from a portfolio manager standpoint, you are able to claim 100% tax exemption in respect of that fee. Similarly, in addition to your non-resident client, you also have now an opportunity. Just go back to the previous slide. Yeah, you also have an opportunity to serve Indian clients, right? And that opportunity is very recently opened up, mainly because if you NSE has launched a US unsponsored DR product, right? And as far as that product is concerned, what does it do? It allows you to take exposure on say US stocks. So currently they have said that there are about 8 stocks on which they can actually give, you can actually get DRs. And those DRs will actually sit on your demat account, which you'll open in GIFT City. So it gives you a lot of comfort that you have actually the asset is actually with you, as against the current model, which you may have seen that many of the broking firms are actually offering, right? You are allowing Indian residents to invest overseas. There, you don't have the asset. You just have the maybe a marking in or maybe just a journal entry in your books saying that you are entitled to that asset. If the foreign broker actually goes bust, there is a huge question mark on whether you will be entitled to that asset, right? There are some guarantees provided, but beyond that, you are really taking the risk on the say solvency of the overseas broker. Here in IFSC, what is happening is you are actually holding the asset, right? You are not just getting some journal entry. You are actually getting a credit in your demat account, and that asset is actually, that credit is actually backed by the actual asset which the bank is holding overseas, right? So there is a clear one-to-one correspondence with the underlying. It is not just a credit which you get or just a journal entry which you see in your statement. So that actually makes the product very, very interesting. And what we have seen is a number of clients actually wanting to invest in this particular product. So as a portfolio manager, portfolio managers can also now start managing offshore portfolio, right? There's a large book of number of clients wanting to invest overseas. So they can actually offer this as a portfolio product from IFSC. Yeah. So moving on to the other, so we already, I already covered this. As a portfolio manager will be entitled to 100% tax exemption for 10 consecutive years out of 15 years. So MAT is leviable at a reduced rate of 9%. But if it is a company and it's opted for the new tax regime, then there is no MAT which is leviable. Also, GST on is not applicable on fees received by the portfolio manager in IFSC from offshore clients. Here, there's a specific amendment which they have brought in the current budget, which says that if income is earned from offshore securities, right, that may have been earlier taxable because the receipt of income was in India. Now they have specifically clarified that if the that income will not be subject to tax, provided the portfolio managed is on behalf of non-resident, such is received in an account maintained with the offshore banking unit, and to the extent such income does not accrue or arise in India, it is not subject to tax in India. That's a specific clarification they have given, and that was something which was required. But I think now this product is very much clear that even if you are making offshore investment, that income will not be subject to tax unless and until that income actually accrues or arises in India. Similarly, investment advisors also, investment advisors can also be based out of IFSC, and they can actually advise non-resident clients as well as Indian clients with respect to their investments. So that's, and the advisory fee which they get will be completely tax-free. A global in-house center, again, it is more from the large BPOs. If you are a large financial service BPO, and if you are serving only your own group entities, you can actually consider setting up a presence in IFSC. If you do that, and if your income is completely tax-free. So today you will know that the 10A regime is gone, right? There is no exemption available for any SEZ unit. But as far as global in-house center is concerned, if you are a entity belonging to a financial service group, if you set up a GIC in IFSC and you intend to serve group entities which are located in FATF compliant jurisdiction, then you are not, you get 100% tax holiday as far as IFSC is concerned. There is certain restriction in terms of how many employees you can actually relocate. Hiring of new employees is no problem. You can actually hire new employees. But if you have to relocate any employees from Indian entities, that is not allowed. That is allowed only if they are supervisory employees, and it is also allowed to a maximum of 20%, which is also subject to IFSC approval, right? So that's as far as GIC is concerned. Aircraft leasing, another important space which is coming up. India is actually wanting to compete with the likes of Ireland and Singapore. So India is promoting the IFSC as a aircraft leasing hub. So you'll find a number of companies actually wanting to set up entities here. They will lease in, they buy the asset aircraft in IFSC, and then they will lease it out to Indian operators. So that activity is again getting a lot of traction, and we find that probably last count maybe 10 or 12 companies are already registered, and there is a lot of inquiry which is happening as far as aircraft operating companies, operating lease companies are concerned. So again, tax. These companies are entitled to tax holiday, 100% tax holiday. Any withholding which they pay on aircraft leases, they are completely exempt from tax. Capital gain on disposal of aircraft, it is if they are disposing it off during the tax holiday period, they get a 100% tax holiday. and also buying and selling of this aircraft, there is no stamp duty, right, on that. So that's how specific exemption is provided. Similarly, similar to aircraft leasing, you also have ship leasing activity, which is carried out from IFSC. It's the framework is yet to be out. The IFSC is still working on the framework, but in the current budget, what they have provided is that if the unit in IFSC, right, if it is paying any interest or royalty to a foreign entity, so if I am hiring any ship from IFSC and I have to make a payment to a non-resident entity, if I were to do that from India, there is a 10% tax which is payable on that interest or royalty, right, which I pay. But if I were to do that from IFSC, there is no such tax, right? So from an overall costing standpoint, now I think because of this change, it significantly improves the cost arbitrage, or rather the pricing which you get from overseas clients. So if you are actually, if any of your clients are actually hiring a ship from an offshore entity and wanting to pay royalty on that, you can actually do it from IFSC and you reduce the overall cost of operation. Right. Going to the last section, probably finance company. Finance companies are also allowed. So finance company, nothing but NBFC in India, right? Similar to NBFC in India, you can actually set up a finance company here in IFSC. You have to obtain a registration from IFSC authority. As a finance company or a finance unit, you cannot accept deposit with deposit from public. The applicant or the promoter has to be from a FATF compliant jurisdiction. And if the investing entity is a entity in a finance company or a finance unit, if it's carrying out regulated financial activity in the home country, it will have to obtain a no objection certificate from its home country regulator. Right? So that's a requirement. Essentially, from a finance company standpoint, the activities are broken down into core activity, specialized activity, as well as say non-core activity. So there is a wide range of activities which they can do. Almost everything which a bank can do, except for taking deposits, is something. Apart from that, I think almost everything can be done by a finance company in IFSC, and that's another area which one needs to probably look at to see what can be done. So if you as a finance company, you can give loan to your clients and earn interest and business income out of that, right? All of that again is going to be fully exempt from tax as far as IFSC, as far as the finance company is concerned. So this is something. What are the kind of activities which a finance company can do, which is covered? Yeah. So that's a quick snapshot of what all is happening in IFSC. And maybe I'll pause there and see if people have any questions. Happy to take those questions. Over to you. So if there are any questions for Sandeep or me, happy to take them. So Chintan, I think over to you. If there are no questions, over to you for closing comments. Yeah, so the question, I can see that there is a question that is it necessary to buy property in GIFT City? Maybe I'll ask Sandeep to answer that question. Sandeep, Okay, so maybe I can just answer that question. This you can't buy a property, or you don't need to buy a property. In fact, you cannot buy a property in GIFT City. You only have to lease it. And there are as of today there are three buildings which are available, and you have to buy a space in that. So when you for you to be a IFSC unit, you need to approach a builder who will give you a space. So you need to lease that space, and based on that you will get a SEZ license, and then you'll also get a IFSC license. Rentals, as far as IFSC is concerned, it's about on a bare sale basis, it's like 55 rupees. So if you are taking a completely furnished office, maybe 110, 120 rupees per square feet. That's what the current rates are.
Okay, sir. Now I would request any members, if they have any doubts, then they can ask their questions to the any of the faculty. Sir, I have like specific query with regard to like broking unit. So whether the broking unit, let's say it would be doing broking for any of the exchanges, for that entire broking income is exempt from income tax and GST, sir?
Yeah, you're right, Chintan. So as far as the broking unit is concerned, the entity can trade on IFSC exchange. There are two IFSC exchange. One is National Stock Exchange, NSE IFSC, and then another is BSE subsidiary, which is India INX. So if you're trading on those exchanges, then your income is exempt from tax, because you will be trading only that. You are not allowed, as a broker, you're not allowed to trade on the India exchange. For that, you need a separate license, right? It's only these exchanges we are allowed to trade, and income is exempt from tax. No GST. There's no security transaction tax on this exchange. So it's like a very cost-effective way to trade on this exchange.
Okay, so I may be doing, let's say I'm a mutual fund distributor. So if I am earning my commission income for the services that I am providing to my local clients. But then I am setting up my my unit over there in GIFT City. So will I be able to get the exemption from income tax and GST both, or it's not so?
So a very good question, Chintan. So as far as the mutual fund distributor is concerned, firstly, you'll have to set up a finance company. Under the finance company non-core business, distribution of mutual funds is a permitted non-core activity, right? Secondly, you can actually distribute Indian mutual funds as well as, say, global mutual funds, but your clients have to be non-resident, right? So if you are distributing these mutual funds to non-resident clients, you can actually do it from IFSC, and to the extent of the fee which you earn, you will be exempt from tax.
Okay. And let's say I'm involved into the distribution of some financial products, let's say offshore financial products that I may be distributing to my clients over here locally. So for that also, this thing I guess applicable, or it may not be
for
so.
Indian business, you don't get the exemption, but the reverse is true. For overseas clients, you can distribute India products and you will get exemption.
Okay, okay. Got that. One of the question is there from one of the property, one of the client is there. Is it necessary to buy property in Gift City?
Yeah, so I answered that. So there's no requirement for you to buy. So you cannot buy a property. You can only lease the property in Gift City. So you need to approach one of the builder, and based on the lease, whatever he allots, the PLOA, provisional letter of allotment, you apply to the SEZ authority and to the IFS authority for a license. But you don't need to buy, or there is no, you cannot buy a property in Gift City. Estimated expense of license or IFSC differs from what type of entity you are setting up. Broking is different. IFSC, and I can send you a schedule for different fees. Different for different licenses, there are different fees which are levied by the authority.
Good. So I guess there are so much of exemption that is being given for from GST and STT and CTT and income tax, and so it makes really sense for these finance companies to at least have a at least to establish themselves over here.
Correct. So today, if you really look at it, this is the only zone where you get this kind of exemption. There is no other zone in India which can get this kind of exemptions. So therefore, or when you talk to clients, you'll find that there is a lot of interest in for them to actually consider Gandhinagar. So we are actually seeing a number of clients wanting to move to Gandhinagar now.
Okay. Any other member have any query? Please, they can unmute their mic and they can ask. Of course, this is like I have attended this session thoroughly, so like I am.
Hello, sir.
Yes, Chavda sir, તમને question.
Hello.
Chavda ji, if you have any question, concern, doubt.
Yes, sir. If any chartered accountant is opening the office there, then are there any relaxation available to him, or there are certain restrictions that where we are providing our services based on that the relaxation will be available?
So as a chartered accountant, see, we are all bound by the CA Institute, right? Whatever code of conduct or whatever we can do as a chartered accountant, we can do everything from IFSC. From an IFSC license standpoint, there are only 3 set of clients who you can serve. So you can serve entities which are set up in IFSC, right? So within the IFSC zone, you can serve non-resident clients, and you can serve Indian clients who want to set up presence in IFSC. So these are the 3 segments you can serve, right? Non-resident clients is not necessarily the one who are setting up IFSC. Even if they are not, the only requirement is that they have to be non-resident. So if you are serving any non-resident client, whether they are doing IFSC work or they're not doing IFSC work, you can still do that work from Gift City or IFSC, right? So if you do that, your 100% of your income or with respect to that, those clients is exempt from tax.
Okay.
So like that accounting outsourcing work and all that, we can set up a unit over here in Gift City. We can do.
Yeah, certainly you can do that. Certainly.
Okay. So it's like more of like that IT units being getting set up in that ITSEZ, like that was there in InfoCity. So that was the kind of the exemption that was there in 2005 to 2015, I guess, and that was there. So it is more of a like a similar kind of the exemption. I guess it is there. There was also like that some 10-year tax holiday and all that was there. So it is on a more on a similar line, right?
Yeah, it is similar, but it is not the same, because those companies were software companies and they were like serving external clients and they were getting exemption. Now, as chartered accountants and all of us, we can actually we can serve non-resident clients. We can do bookkeeping, taxation, accounting, right? Management consulting, all of that from here. And if you're doing it from non-resident, you can get an exemption. For financial service companies, if you are a financial service entity and if you are doing providing service to your group entities, right, within the group you are providing service, then you can also put that and that operation in IFSC. So it only to a limited extent, the tax holiday for those companies are available only to a limited extent of they being financial service companies. So for example, let's say IBM, right? IBM, if they want to set up, probably they will not get. But for example, a bank wants to set up, right? A Citibank, for example, or Morgan Stanley wants to set up, right? These are financial service companies, and they will, or an insurance company, for example, right? They want to set up, can set up their back office here, and they should actually serve their global entities from here. So that is very much possible.
So, sir, even bank also, if we are not serving the global clients, if they are to the extent they are serving the retail client, they won't get this advantage.
Yeah, so you cannot serve clients, you can serve group entities. For the GIC exemption, I'm saying, you have to necessarily serve group entities. But from a IBU standpoint, you can of course serve, it's like any other banking unit, right? And any other bank branch. There you can go ahead and serve your clients and carry out normal banking operations. For normal banking operations, you get 100% tax money.
Okay, then also the exemption will be available.
Yeah.
Okay. Not like us chartered accountants.
Correct.
Right, sir. Thank you. I think, sir, for all the entities, certain restrictions will be there, I think, sir.
When you say restriction, what kind of restrictions are you saying?
Sir, for example, as you said, sir, for chartered accountant, if I am serving, providing 3 type of services, then also I am having the benefit of exemption. So for the same way, sir, for the engineers, for contractors, for developers, everybody
all
will
of them,
have
all of them will have to necessarily serve these 3 segments of clients only.
Achha,
so from an ancillary service provider, they can only provide these 3 segments. But a bank is, as far as the bank is concerned, bank is carrying on banking operations from here. So long as their transaction is in foreign currency, right, they will be entitled to exemption. So for example, IBU is providing a ECB to a Indian bank, Indian company, right? Say like Citibank is providing ECB to Reliance, let's assume, right? Then to that extent of income it earns from Reliance, the Citibank will get that exemption.
Right. Chintan bhai.
Yes.
Sir, I think we should visit once to this IFSC center, and we will have a little bit more knowledge, and we will be in a better position to throw it to our members that how our fraternity can take benefit of it.
Yes. So that's what we can do. I guess we can do one physical seminar as well. Like
yes, definitely. Yes.
Suresh sir and Sandeep bhai, if they can, cause like this in virtual mode, that feeling may not be there. That what
Yes,
kind,
yes.
but and once the people will physically visit, they will interact. Then I guess
Yes.
things would get very clear in their mind about the opportunities. Which
Yes,
are
sir.
there.
So number of members will have certain questions, but they won't be able to share it on this virtual platform. So if we can go for any physical seminar, I think it will serve more better purpose.
In fact, they insisted for the physical seminar only, but then it was our choice to go for the this thing. So definitely we can work something out for that.
Yes, yes. After some time, we should go for that.
Yeah. So we IFSC Gift City has a good facility available for themselves. So we can actually do their this session. They have a boardroom, nice boardroom. We can do that session in their office, and they will also like to host all members, right? Chartered accountants. So we can do it in their office.
Thank you, sir. Thank you.
Chavda sir, sure. In this month, next month, in month or two, we'll definitely work out something for that. Right?
Yeah.
Even if you don't want a proper session, no, you should certainly organize a field trip just to get your members, just to get a feel of the place, how it is, how it looks, all of that. They will start knowing that these are the opportunities which are there. Right?
Yes.
Because we are the most closest professional, we are there, and we ourselves we are not aware of. Because like many a times, client expects, like I just 2-3 days back I got a call from Delhi HSBC, and HSBC Mutual Fund, and they were like, what are their ones? Then I was like a mute to answer them. But then, so it's people expect that at least we should be knowing, and actually we should know that. So
Correct.
True.
good. Chavda sahib, vote of thanks. Tamil sahib.
Thank you, Sarji. Suresh Swami sir, and of
Sandeep
course,
sir.
Sanjay bhai.
Sandeep
Sir,
sir.
you explained very lucidly, and the main important thing is, sir, some of the doubts are cleared, and sir, it shows that we have an interest to know further about it. Yes, there are certain possibilities. If we can drag it out, our fraternity can definitely get benefit of it. So, as you, sir, rightly pointed out and explained, that within a couple of months or even before that, we will plan some physical seminar with your definitely support and permission, sir. So thank you very much to both the faculties. Thank you, Chintan bhai. Thank you all the members for remaining present to making this seminar success. Thank you, everybody.
Thanks to
Thank you
Rima
so much.
also for arranging this wonderful session and taking all the logistics and everything. So thank you, Rima, for this.
Thank you.
Thanks,
Thank
Chintan.
you.
Thank you, sir.
Thank you.